All right, welcome to Your Time, Your Money, the show where your time is just as valuable as your money, and we know that. Thank you so much for tuning in today. Today we have a great topic, and actually my partner, Matt Trillo here, is actually in the pension system that we're going to talk about today.
So I have extensive knowledge.
Insider knowledge.
Some insider knowledge, in a good way. In a good way.
Yeah, legal, because the word insider is not... It's not good.
Wait a minute. Oh, I want to say compliance is not going to let this out, Mark.
If you're a politician, you can do it, but
not for long. Not for long. That's going to change soon.
But we did want to remind our listeners and viewers that this is actually charity token episode. For those of you who are new to us, this episode we are going to be dropping some hints to where we've hidden one of 10 charity tokens around the Capital District region. Should you find that token by picking up on our subtle hints, Mr. Trillo,
I've been practicing my hints.
Subtle hints. Then you will be able to bring that in the office, and we will donate $1,000 to a charity from our pre-approved list, and you'll receive a $100 gift card to a restaurant of your choice around the Capital District area.
We have the large Happy Gilmore check for you.
Yes.
And that's going to be awesome. You can't take it with you, but we will let you take a picture with it. Definitely exciting, and can we talk about the fact that someone's already found one?
Yeah, somebody's already found one.
You already had one that was
which
found?
we're excited about. Look, our goal is to get them found.
We
want to give away the money to local charities, but at the same time, we don't want it so easy that somebody just runs out of their house and is like, oh, there we go, I'm right there.
What our viewers don't know is Mark is a bit of a treasure hunter himself, and when I first met him, he told me a story about how he drove through 3 states to find some treasure on the radio, and one person beat him to it by 20 minutes.
Yeah, it was 5 minutes, but
yeah,
after driving about 600 miles.
Oh my God. This hopefully won't be as bad, where you're trying to give money to charity and help people out.
Yeah.
So
it is actually the trickiest thing for us to do while we're trying to do an educational podcast.
Try to sneak in some information
to break from that information train of thought to something totally non-related of placing a hidden wooden token around the company area.
Honestly though, with the pension system, remember there's a lot of different locals. There's a local retirement system. There's the teachers' retirement system. There's a lot of different systems out there. There's municipal retirement systems,
police,
right?
fire.
There's a lot of elements, and what people need to know is that it's critical that you get ahead of this. And you don't want to be a person that's waiting until the last 2 months of your career to start figuring out pension option planning.
Correct.
Right? And ultimately, you want to work with a professional who has knowledge and are thoughtful about all of your needs, because not everyone's situation is different. It's the same. Yeah.
And even from the very beginning, when you first enroll as a state employee, at least for the state of New York, what we're talking about, is there are some individuals who they don't complete the enrollment packet into the pension.
Right.
For certain professions, you know what I mean? And then they find out a couple of years later and they just miss those years of service credit.
Right, and that's the difference between Tier 4 and Tier 6 was 2 weeks, 3 weeks, where if I got hired prior to a certain date, then I would be Tier 4, which that tier is way better than the Tier 6, where I have to work until I'm 63 or 64 years old.
Yeah, and my father was Tier 1, which a lot of them are passing away because that tier is really the original, where nobody added into the system.
No one even put the money in.
But they have the full benefits that they
now Tier 6, you have to pay your whole entire career.
Yeah.
And as you make more money, you pay more money.
Yeah, so let's delve into some of the nuances of that, maybe how the pension's calculated, and then things to keep in mind that your pension choice is going to affect your spouse.
Yeah.
Right? So let's start with, at least how the pension's calculated, what people need to know about when they enroll in the pension system.
So in the teacher world, you're going to work for at least 30 years, and it's tricky because every tier is different. But let's work off of a Tier 4, because you're going to work for 30 years and until you're 55, and otherwise, if you retire earlier than that, you're going to get a time issue and an age issue, right?
Yeah. So there's two qualifications
there. Deducted back away from your total pension unless there's some type of event that you can't control, where you become disabled or you have a stroke, something to that effect. Whereas in the law enforcement or the fire system, it's 20 and done, right? Because it's a lot more difficult of a career.
Yeah.
And your life's on the line in some cases. Well, you can't say that not about teachers, because there are school shootings every day, which is awful. But, the police and fire put their lives purposely on the line. Whereas Teachers do not.
But
right?
in the firemen, look, there's a lot of fallen firemen in the Capital District area
Yeah.
where they didn't reach the pension system yet, and their spouse got just a multiple of their salary through death benefit.
And that's a
but
big
they
that's a
didn't
big
get
problem.
their pension.
That's a big problem. People think that they're going to get the pension. So if someone passes away, let's say a firefighter, then their spouse only gets 3 times the annual benefit of their annual salary, but only 50,000 is tax free.
Yeah, prior to them claiming for the
Right.
pension, right?
And there's additional coverage out there for fire or for police where they can do extra coverage because it's a higher risk profession, but you're not going to get a payment for the rest of your life from the state, city, or municipality.
Yeah.
So it's important that people know you got to protect yourself, especially if you have 2 incomes in your family or if you have children and you're expecting that pension or that salary to live on. That may not be there if your spouse passes away prior to retirement.
Yeah, and what's also important to understand is if we're using Tier 4 as an example, is that you are committed to pay into that system 3% of your salary each year
for 10 years.
For 10, right?
Correct.
And that's key because there's some affordability there at the end of 10 years for a person.
You get a nice raise.
Yeah, a nice 3% bump up.
Whereas in Tier 6, right, I mean, if you're Tier 6, you're going to pay that for the rest of your life.
Yeah.
And I mean, like a Tier 4 person, they could go to, after their 10th year, they have a little more money to spend. So they could go to downtown Albany and have some fun.
Or what else do Tier 4 people not do, which we encourage them to do, is increase their 403B contribution or increase their deferred comp contribution because
but they like to live up to that check
money.
a little bit more.
Yeah, exactly. Or take that and consolidate some debt, get some debt paid off, save some extra money into non-retirement or your kid's college, or whatever that might be. But that 10-year point is a key opportunity for them to do that.
Yeah.
Right. And it's got to be unique to each person because your tiers are different. Right. So Tier 4, that's unique to them. But Tier 6, it's not.
And there's very few Tier 5s out there, which is why we don't really talk about it. But either way, you should be working with your financial professional to think about what the best situation is for you prior to getting to your pension option plan.
Yeah.
Because once you make your choice, you have 30 days to change it, just like with Social Security. And then once you're locked in, there's no going back. You can't go back and say, oops, I made the wrong decision. For example, I was talking to a gentleman that I've worked with for a long time, and he was going to take the pop-up option. And it was his pension. Now, he has diabetes, he has all these health conditions, and his wife, her longevity, her mom is still alive at 92 years old. Okay, so is the pop-up option the right one for him? Absolutely not. His wife is going to outlive him.
Yeah.
But the pop-up option says that if my spouse passes away, my income pops back up to what it should be prior.
Yeah, so let's take a step back for the listeners and let's go through those different options, right?
So there's a single life option.
Single life, so you take it, you die 1 month later, it's gone.
There's a joint option.
All right, so
25,
that
50, 75, 100.
Your spouse, or if you do name another beneficiary, you can expect a large drop in your pension if it's like a child because of age difference.
Because
right?
they're basing it on an actuarial table of age.
Yeah,
correct.
So we get asked quite a bit, hey, what if I put my kid on, or to my pension system?
Yep.
Well, if you do that, they're going off of that child's life expectancy,
Correct.
which is a lot longer than yours.
Yeah.
So your pension amount is going to drop
but
sizable.
that can only happen if you're not married.
Correct.
If you're married, then you can't pick your child.
Yeah.
But so let's go sidebar there, right? Like, so there's single life, joint, pop up, and then there's like this federally subsidized insurance one where if you die, all the money is taxable. It's just one taxable check, which is horrible.
And within the joint and the pop-up, there's percentages that your spouse gets, 100, 75, 50, or 25. That's the percentages, the amount of the pension that they get when you pass.
So like, let's talk about like a perfect scenario where, unfortunately, the person passed away, but they had worked with me for about 5 years. They had life insurance, and they had just retired, so we took the joint 100% spousal, right? We knew their health was poor, okay? They made it about 6 months into retirement, 3 to 6 months, and they passed away. Now, all the life insurance they had when they worked with us, they had it paid out tax-free.
Lump sum
to their spouse. And then their pension went to their spouse tax-free, okay? So now this is the scenario where that's why you always want to work with somebody who knows the system, because they may be setting you up differently than somebody who doesn't know the system, right? Yeah. And it's important that people differentiate. And another little tidbit here, Mark, is the example might be if I'm a teacher, police officer, firefighter, I want to buy term insurance most of the time through my employer because I get it at a cheaper rate. Whereas with working with an advisor, I want to spend money on permanent coverage where it's going to bolster and grow over time.
Yeah.
Right. So
as part of potentially a pension option plan.
Exactly.
Which for listeners is taking the difference between your single life and your joint.
Yep.
So for instance, if I was going to protect my spouse with a pension, I may have a 10, 15, 20% drop in my pension benefit, which is my single life, the one that I earn.
Let's say you're going to make $100,000 as a single life.
Yeah. So I may have that drop of 15, 20%. Now I have math I have to do. Is it cheaper for me to make New York State protect my spouse
most of the time it's not
by paying the 15 or 20%, or is it cheaper for me to take the single life, take the difference I would have given to New York State anyway, and then go on the private market and buy insurance?
And that's exactly what pension option planning is.
Yeah, and it doesn't work all the time, but the majority of the time it does.
Yep.
And I would say one caveat to our listeners: you really have to work with an advisory firm that understands pension option planning, because not all
unique.
Insurance products are created equal.
Yep.
And not all guarantee or put you in the benefit situation where you need to have that pension replaced for your spouse.
It's really a piece of artwork that you got to let your advisor paint for you. Yeah. Because every situation is different, every amount is different, the numerator is different every single time.
And I've seen a lot of cases that somebody has tried to do pension option planning with other firms.
That's a nightmare.
And they don't have enough coverage.
Yep.
They have the wrong coverage.
The coverage runs out.
They've have too much term, not enough whole life.
Yep.
Too much whole life, not enough term. The affordability is not there. They're actually taking less out of their pension because they're spending more than they should on the pension plan. So it's really a customized, as you go type approach. It's not a cookie cutter approach.
No, you can't take the cookie cutter approach and try to make it work for everybody.
Look, a person's unique, just like the Albany skyline.
Yeah.
Yes, Albany has a unique skyline.
It does.
If you look at Albany, there's a couple things in Albany, actually one or two things that are only found in Albany anywhere in the entire world when you look at their skyline. And that's what makes Albany unique. It's the same thing with a pension planner.
You got to differentiate it for each person.
Their situation's unique because the age difference between them and their spouse, the system that they're in, the time that they've been in the system, their final average salary. There's so many factors that go in.
If they're sick, if there's something wrong when they get to retirement. So I urge our listeners, if you have a pension, especially if you have two pensions, that becomes even more complicated. So if you're in a household, and because pensions are far and few between, Mark, right? Yeah. They're not everywhere nowadays. So I urge our listeners, if you have a pension, please call us. We'll do a free consultation. Even if you already have an advisor, that's usually what jams people up. I already have an advisor. I already work with somebody. Well, are they really good at what they do? Do they really know this system like I know it, or like you know it?
The back of your hand. Yeah.
So I would urge our listeners to call in and at least get a free quote. Let us go through it with you. We'll give you the idea, and you can take it to your other advisor and let them pick it apart. Yeah, I have no problem with that.
And the other key point in that pension process that I think people need to know is sometimes people get into the state system a little bit later in life.
Yeah.
And they're not in there the 30 years.
Right.
But there's a key point, especially with Tier 4.
62. Right.
Well, no, I'm thinking of the key point where prior to a certain number of years of service, 10 years of service, you're getting a 1.6% credit.
Yes.
So if you retire in 9 years, right?
Versus 10.
Versus 10, you've gotten 1.6%, but at 10, there's a magic switch, right?
It goes to 2%.
2%.
Right. And the same thing is the teachers, it's 20 years.
And 20 years, right? So those are important key dates to know, because if you're in year 19 in the teachers,
and you don't go to 20,
you do the math on it. I mean, that's the difference of what, 30% versus 40%.
Sometimes there's an emotional piece there where you can't make it all the way through.
Yeah, well, that's any profession though, right? I mean, it's true. It depends on your coworkers. If you like what you do.
Teaching is a mental drain. Firefighting is a physical and mental drain, right? So there's different elements there.
Yeah, and one size doesn't fit all.
It doesn't.
Right? Like to your example, if you're a fireman and you're going to go get your boots on, right? If it's not the right boot, you're not going to fit into it.
Right, exactly. And the same thing for a classroom. If I go into a classroom and it's not the right setting for me, but I got to grind through it sometimes. You got to get that extra year of service if you need to. And that's why, again, you got to get with your advisor and you got to push through sometimes on that last year, because it's going to make the difference, right? It's going to make the difference on, 32.6% versus 40% if I get that extra year.
Yeah, and
that's forever.
Yeah, and the other thing that can weigh into that too is you want to be ultra focused in on when your contract negotiations are up.
Yep.
And when they're coming up. because sometimes people will pull the trigger early to retire because the next contract negotiation, there may not be health insurance
or health insurance
or
higher premiums.
So you really want to plan your pension out with the other ancillary benefits that you get through your union, through the state pension plan. And I've seen a lot of people, retire 3-4 months early or even a year early because that new contract coming out was so much less advantageous to them that they ended up saying,
or they get a big sick day buyout, right? Something to that effect. So
sick day buyout, or in my dad's case, he had 34 years in, but he was only 54.
Right.
And they offered him an early out.
Well, sometimes they'll do an addition. They'll say if you have your years of service plus your age, if it's over a certain number, you're going to get the full rep.
Yeah, so for them, they offered him early out. They gave him a bonus.
Yep.
They applied a penalty for retiring early, but the bonus sucked away the penalty.
Offset that, right.
And I don't know whether he walked away 1% ahead or whatever it was, but it made sense. Hey, be out at 54. You know what I mean?
So again, I'll reiterate, make sure you speak to an advisor. If you have a pension, make sure that advisor is well versed in pension option planning, and they should be able to demonstrate the how and the why on the development of a plan.
And what would you say are some of the things that a potential pension earner or potential earner wants to bring into you for a meeting? Like, what are the things that they should know? The best
things they should bring in are their packet. They're going to get a 7-page packet from their LRS or TRS or whatever municipality. They want to bring in any current life insurance coverage. They want to bring in any knowledge or any issues they have health-wise, right? And those are kind of the 3 bugaboos that you got to have, because it's the math, it's the current value of what you have, and then it's what we're going to do in the future. Those are really the critical elements to a pension option.
Yeah, and I would throw one little
and
thing in there as well.
Any resource statements.
Is bringing in something that shows your beneficiary to make sure your beneficiary is who you want it to be.
Yes.
Because we've seen ex-spouses on a lot of pensions.
Right, it happens.
That doesn't necessarily benefit the current wife or current husband. So those are some things that we like to check.
It happens.
Look, we dot our I's and cross our T's, so we want to make sure that all those things are checked. If you'd like to find out more about pension option planning, if you would like us to do a review and give you some suggestions as far as what we would do if we were in your shoes, then by all means reach out to us at irontreefinancial@ceterais.com. It's a quick way to email us. You can find us on LinkedIn, Twitter, Instagram, Facebook. You can reach us at 844-444-YTYM for your time, your money. And as always, it's your time
and your money.
All right, guys, thank you for tuning in to another episode of Your Time, Your Money. We really appreciate it. If you enjoyed today's episode, please feel free to share this with friends, family, coworkers, anyone else that you think might be interested. If you do have questions or topics, you can always email them to irontreefinancial@ceterais.com. Please follow us on LinkedIn, Facebook, Spotify, Google Play, and many other sources that were available. And you can reach us at 844-444-YTYM. And as always, it's your time and your money. Cetera Investors is the marketing name of Cetera Investment Services. Securities and insurance products are offered through Cetera Investment Services, LLC, member FINRA, SIPC. Advisory services are offered through Cetera Investment Advisors, LLC. Cetera is under separate ownership from any other named entity.